Yeah, thank you, Amit, and good afternoon to all the participants. And warm welcome to this webinar on credit reporting for the MSMEs. Before I get into the nitty-gritties of the credit reporting, I thought it will be only appropriate to give a quick overview in terms of the World Bank Group's India's credit reporting program in terms of the various activities as far as this particular initiative is concerned. Firstly, the project is actually into three different components. The first is in terms of the sectoral interventions, in terms of trying to understand, what are some of the alternative data sources which can be used, facilitated by credit bureaus and therefore used by lenders, financial institutions, and banks in their lending decisions to the MSMEs. The second aspect of the project deals with the capacity building in terms of enabling the financial institutions to actually use the data from the credit bureaus in their lending decisions. And third, of course, is the sessions that we are having today with CI and also with a number of other industry associations in terms of creating that awareness amongst the SMEs in terms of the importance of credit reporting and what are some of the things that they need to keep tab of and how important credit reporting is going to be in terms of lending decisions of banks and other lenders. So that's broadly what the outline of the World Bank Group's credit reporting program is concerned. If you look at the access to finance, if you look at the challenges that the MSMEs face, obviously I think all of you will be quite aware in terms of what the challenges are. But I think it's important to place in perspective, what are some of the challenges. It could range from, the ineffective marketing in terms of, limitations in the production capacity, the various infrastructure constraints that MSMEs face, it could relate to, power, water, and so on. Then, of course, the technological constraints that some of the SMEs might face. Competition, given the fact that there are multitudes of MSMEs which cater to very similar sort of product lines and therefore intense competition amongst themselves. There could also be regulatory concerns. But one of the chief constraints or challenges faced by MSMEs is in terms of access or availability of finance from the banking system. So that is something which is paramount. So if you ask any MSME in terms of what are the challenges that they face, I think topmost in their list would be the access to finance, access to working capital, and so on. So that is something that I think all of us know. So I don't want to belabor that point. I think the key point that I would like to stress here is to see what are some of the actions that you need to take as owners or proprietors of MSMEs in terms of being able to get these funds from the banking system. So broadly, in terms of what we're going to be looking at here, I'm going to be largely focusing on what is the credit report, what are the typical features that the loan officers look into the application form, and what are some of the things that we need to keep in mind when you fill in the application. So I'll be talking a lot more about that. So maybe I think these are some of the things I think we can straight away go into the sources of financing for MSMEs. So if you look at the typical sources of financing for MSMEs, you will find that 5% of the total funding is actually from formal financial institutions such as banks. There could be 2% from informal finance, but largely about 93% is either going to be self-finance or there is going to be no financing at all. So that is typically what a typical the slice of funding sources as far as MSMEs are concerned. So the key therefore is to move from here to the formal financial institutions. And we believe that one of the ways to do that would also be to make sure that you understand the importance of credit information. You also understand how bureaus function, and what are some of the steps that you can take to make sure that you're doing things right as far as the information that you supply to the credit bureaus through the banks. So if you look at the typical formal financing options that are available today, you can access funds from the commercial banks. The non-banking finance companies today cater specifically to the MSME sector by coming out with different products which are tailor-made to the MSME sector. There are these new small banks which again are going to cater to the MSME sector. There are microfinance companies, cooperative banks, and so on. So if you look at the typical step, I'm sure all of you know this, but I think it's important to place this in perspective because it might look simple, but I think some of these steps are very important, and what actually goes through in each step also becomes important. One, of course, once the bank is selected, you're going to prepare your documents. I think the document preparation is a stage which is very, very critical, and maybe that's a stage where the promoter or the owner of the company may not be paying so much attention. I'll delve into that in a little more detail as we go along. Then comes the loan application processing, and then it's the bank's decision to accept the proposal and lend or reject the loan proposal. Now, if you look at what are some of the documents that the banks require, one of course is the proof of residence, the proof of identity, the bank statements in terms of the past track record in terms of your relationship with the bank, of course the registration papers, the IT returns, and the financial statements. But besides that, the bank will also get what is called as a credit report from any of the credit bureaus. Now, what is a credit report? I'm not sure how many of you have actually got a credit report for yourself or for your company. So I think maybe in the Q&A section, I think we can sort of explore that a little more. So essentially, a credit report is a snapshot of the credit history, which essentially means it essentially gives you the snapshot picture of what are the loans that you have availed, what has been the track record in terms of repayment of the loans over a period of time. So what is that period of time? What does the credit report capture are things that I will explain in a little more detail from now. So typically what happens, so once the application is sent to the bank and you give all the key documents there, the bank officer is going to produce your documents, check whether the documents and the information therein are correct, and then decide on whether to give the loan or not sanction the loan. So that is based on what is called as a credit worthiness. So how do they assess the credit worthiness? So the credit worthiness essentially means whether you have the ability to repay the loan or not. Now, how do they assess that? Now, the assessment of that is based on a combination of two factors, which is called as a repayment capacity and the repayment willingness. So obviously, greater the credit worthiness in the eyes of the bank, it's going to be easier for you to get a loan, and also the quantum of loan that you will get will also probably be higher. And it goes without saying that higher the credit worthiness, the interest rates are also going to get a lot better for you. So essentially that is called as a risk return paradigm. So which means that lower the risk, lower the interest rate for you. So it's going to be higher the risk from a bank's perspective as far as the borrower is concerned, higher is going to be the interest rate. So how does the bank assess the repayment capacity? Now, if you look at the repayment capacity, it essentially looks at three things. One, of course, is the industry scenario and the business dynamics as far as the company is concerned, which essentially will focus on how the industry is doing, and therein how is the company doing vis-a-vis the industry in terms of one, the market position, which essentially is the ability of the company to sustain itself in a competitive environment over a period of time, and what sort of competitive edge it has over the other players. The other, of course, is the operating efficiency, which essentially ascertains the ability of the company to produce quality products at the lowest possible cost. Then, of course, is going to be the analysis of the financial statements, which essentially will outline how the company has performed over the past few years in terms of both the revenue growth, the profitability growth, and some of the key financial indicators, and what sort of cash flows have been exhibited by the company over varying periods of time, both in terms of the upswings and downswings in the industry and the economy. The third, of course, is the personal discussion, wherein you try and ascertain the management, essentially the management evaluation, wherein you check out not only in terms of how strong or weak the management team is, you also ascertain how the promoters are, what is the promoter's credibility. You also check through all the documents which have been given by the company and so on. And last, of course, is the credit report, which essentially outlines what are the sort of loans that you have taken, both as an individual and as a company, and whether you have actually repaid the loans. Maybe when we take up the question answer session, I would actually like to know how many of you have actually got a credit report for yourself from any of the 4 credit bureaus that are there in our country today. And if not, I think you need to get that right away. I'll talk more about that when I come to that particular aspect of our discussion today. The second aspect of the lending decision is the repayment willingness. Essentially, it is an analysis of the management's intent to pay the loan in a timely manner. And this again is based on 2 aspects. Of course, you can't have analytics for this. It is essentially going to be based on one, the past track record of the company, and which essentially is something that you get out of the credit report to see if the past loans are paid on time. And the second aspect is based on personal discussion that you would have with the management or the promoter. Now, here, as a banker, one would like to make sure that the promoter or the head of that company understands what the liability is and what is the definition of the payment obligations. So if it's going to be a quarterly payment, the promoter should understand that on such and such a date the payments are expected to be paid in a timely manner. So once both of these analysis is done, then the bank is going to decide whether the loan is going to be sanctioned or not. So that is as far as the lending process is concerned. So the key takeaway there is, besides the fundamental analysis of the industry, the company, the management, and the financials, the bank is also going to look at the credit report a lot closely. So if you look at the key points of the application, it might sound a little basic to say that why are we talking about the application part of it here. It's something that everyone is filling it, but I think a lot of times you will find that this is a task which is actually maybe delegated to somebody else in the organization. Maybe the owner of the company or the promoter has not seen what is actually filled other than actually signing the documents. So what are some of the things that are actually being given to the banks? You're giving both the documents as far as the company is concerned, as also the promoter's documents. The second aspect is, let's say that if you have a guarantor who's guaranteeing your loans, you're going to be providing details or documents as far as the guarantor is concerned. Also, you have to remember that the requirements will vary from bank to bank, but by and large, you will find that the sort of documentation requirements are going to be largely uniform across various banks. The fourth important point also one has to recognize is that credit cards are also an important form of credit, and it also goes without saying that repayment track record of credit card is also extremely important. That's something which will also get captured in the credit report. So that was essentially a primer to our main topic, which is on the credit reports and credit scores. So let's look at the credit information reporting and credit scores. Essentially, we're going to be talking about the credit information sharing. What is the credit bureau? What are some of the credit bureaus there in our country? Who uses the credit bureaus and what is not a credit bureau? So let's look at a very simple case study to drive home the point in terms of why a bank might sanction a loan to one SME or company and may not sanction a loan to another company. So let's look at two entrepreneurs, Mr. Mishra and Mr. Banerjee. And Mr. Mishra, let's assume, has a small manufacturing unit called as Mishra and Company. And Mr. Banerjee has a trading company called as Banerjee and Company. And both of these entities are classified as MSMEs and both have actually applied for a loan. So from a banker's perspective, you'll find that the application form and the sort of details therein seem to be quite fine as far as both of these companies are concerned when they apply for the loan. The documentation for Mishra and Company and Banerjee and Company is also pretty all right. Whereas the credit report for Mishra and Company seems to be fine, but it's not so fine for Banerjee and Company. So in the evaluation process, it is possible that Banerjee and Company's credit proposal gets rejected, whereas Mishra Company's credit proposal gets approved. So what went wrong with that? So when the bank officers actually peruse the credit report of Banerjee and Company, it is possible that there could be a variety of factors which are listed there. You could have notings which could indicate that there have been delays on the loan installments on the past loans, which essentially meant that the company had not repaid the past loans in a very timely manner. There could be late or unpaid credit card bills. There could be written off loans on the bank side. Let's assume that the bank gave a loan of 1 crore. They wrote off 50 lakhs. So that information also gets captured in the credit report. Or the bank would have arrived at a settlement with the company to say that, okay, instead of 1 crore, you pay me 20 lakhs and let's close the matter. It is also possible that the company had made multiple inquiries with a number of banks or other lenders for a particular loan. So that could also be one of the factors. And lastly, there could be too many loans or the company was highly leveraged from the bank's perspective. So it could be any of these reasons, a combination of reasons that could have actually resulted in that credit report not being satisfactory. So the credit report that you will get also will capture very similar information. So the question now is, how does a bank get a credit report? I think before that, maybe you could tell me in the Q&A session that what your experience has been when you applied for a housing loan. Today, if any of us were to apply for a housing loan as an individual, with every bank is going to produce the credit report of each of us, and that can also be used as one of the factors in deciding whether to give you a loan or not. So how does the bank get the credit report and who's creating this credit report? So when you apply for a loan or get a credit card, you actually submit an application. Let's assume that we are applying for a loan or a credit card for the first time. So you have no credit history. So the first time that you've applied for a loan is now, where you've applied to a bank to get some sort of a loan. Now obviously, once you have sanctioned a loan, you're going to repay the interest and principal over a time frame. Let's assume it's 2 or 3 years. And the bank also keeps track of what your repayment track record is. Now, once the bank starts getting the repayment from you, it will keep informing the credit bureaus from time to time. So the credit bureau will capture the information about your repayment behavior with that particular bank on that particular loan. So let's say that the next time that you apply for a loan to another bank, what happens? I think the first process is going to be very similar. You're going to give the application form to the bank, but the bank will also source the credit information report or the credit report about you from one of the credit bureaus. So this is something which is now going to be part of the entire appraisal process. So what will this credit report carry? This credit report is going to carry the repayment experience on your first loan. However you repay the loan, have there been any delays? Have there been any write-offs on the bank side? Have any of these been settled, and so on? It could also capture information in terms of your credit card repayment behavior as well. So those are things that get captured here. So you might wonder, how does a bank give the data to the credit bureau, and how does a credit bureau give the data back to the banks? Now, as per RBI regulations, all credit related information will have to be shared between the banks and the credit bureaus. It could also include, when I talk of banks, I also talk of other lenders as well. And all banks in India will have to get the credit report from any of the 4 credit bureaus in the country. So that is something which is essentially a part of their appraisal process. So the credit bureaus keep updating the information about your loan repayment behavior from time to time, and that is something which gets captured in the credit report. So let's say that tomorrow we are going to apply for a loan. Then the bank will seek the credit report from any of the 4 credit bureaus, and that credit bureau is going to give the bank a complete report in terms of the repayment track record of whatever loans that you have availed of. It could be a personal loan, it could be a housing loan. You could also capture it will also capture the details in terms of your credit card repayment behavior. So if we go back to the case study and try and see what the differences between the 2 companies were. Banerjee and Company is obviously exhibited a negative credit behavior because it obviously had things which were not favorable. There could have been delays in the loan. There could have been unpaid loans. So that is something. It could have been written off. It could have been settled loans and so on. So that essentially is a bad credit behavior. So the key fact that we need to take back with us is to make sure that do not over leverage, which means that you have to borrow within your capacity to repay that loan. So don't over leverage is the message as far as Banerjee and Company is concerned. So if you look at Mishra and Company, a lot of positive information from the credit report, which essentially shows very good credit behavior. The company has obviously been making timely repayment on whatever loans that they have availed of, and also the promoter, that is Mr. Mishra, has also been pretty good as far as his track record in terms of the repayment of loans or the credit cards. So let's try and understand what is a credit bureau. So credit bureau essentially is an entity which is going to collect and store all the credit related information, which could be on loans, which could be on credit cards, and so on. So the credit bureau essentially is going to process the information that it collects from various of these lenders and produces what are called as these credit reports. So credit report is one part of it. It also generates what are called as credit scores. So both of these together give the banks or any of the lenders a tool to actually assess what your track record has been. And this will also be one of the factors that they're going to consider when they decide to sanction a loan or not. So some of you might be wondering, is the information going to be safe with the credit bureau or not? And, why is somebody capturing and, sharing with it? As I mentioned earlier, the credit bureaus are regulated by the Reserve Bank of India. And the regulations also make sure that whatever information is available with the credit bureau is going to be safe and private. Now, only you or the bank from which you are going to be seeking a loan will have access to your credit report. So nobody else will have access to the credit report. It's not that somebody else can, request for the credit report on you. So it's only the particular bank which is trying to decide on whether to sanction a loan or not, and you as an individual can get a credit report on you. And we also have to remember that the credit bureau is not going to change any information that it gets from the bank. The key role for the credit bureau is to process the information that it receives from the bank and makes it into the reports and scores, which will facilitate a decision making from the bank side. So that is an important role of the credit bureau. So there is going to be no change of the information that it receives from the lenders or the bank, any of the credit card companies. So who uses the credit bureaus? As per regulation, banks and lenders, I told you, will be the key users of the information from the credit bureaus. All lending institutions by the Reserve Bank of India regulations have to be members of all credit bureaus. They have to share information with all the credit bureaus. So today there are 4 credit bureaus. I'll tell you what the names of these bureaus are. And when they're going to make a lending decision, they can seek the credit information report and the credit score from any of the 4 bureaus. So that is how the banks get the information, how they provide the information, and also get the value-added reports and the credit scores back from the credit bureaus. Individuals and entities can access their own credit reports. I think what all of you should do at the end of the program is those who have not seen the credit report or have not got your own credit report should immediately go to any of the 4 credit bureaus websites. Today, the government has ensured that individuals get 1 free credit report during the year from any of the 4 credit bureaus. So technically, you can get 4 if you apply to each of these credit bureaus to know what your credit scores and how your repayment track record is. So I would urge all of you to actually do that. Once the program is done, you can visit any of these websites of the 4 credit bureaus and have the access. That will also tell you, how your track record has been and what your score has been and so on. The other entities which access credit bureaus are insurance companies, telecom companies, credit rating agencies, stockbrokers, the trading members, and also regulators such as SEBI and the Insurance Regulatory Development Agency, IRDA. So these are the other entities who are allowed to access information from the credit bureaus. So important that you get to know what your credit standing is by way of the report and also by way of the score. So I kept talking about what the 4 credit bureaus. So finally, it's here. So there are 4 credit bureaus in India. So CIBIL is the first one which came into existence in the early 2000. Today, it's called as TransUnion CIBIL. TransUnion today has a stake of about 82% in the company. Then we also have Experian, Equifax, and also CRIF Highmark. So these are the 4 credit bureaus in India. And all of them do give credit reports and credit scores, both on individuals and also on companies. They also have a lot of other activities that they do. They come out with a lot of data analytics as well, which sort of augments their income. Now, I think it is important to also understand. I think Mr. Tripathi, when he made the introduction, also touched upon, the rating agencies. I think one of the important things that we need to keep in mind is credit bureau is not a credit rating agency. There is a big difference between a rating agency and a credit bureau. Many of you might have actually undergone a rating exercise, with one of the rating agencies to get your MSMEs, rated either through the NSIC subsidy scheme or on the conventional scale of AAA and downwards. So the rating agency's key role is to ensure that they provide an opinion in terms of the repayment capacity of the borrower from a futuristic point of view. So typically you would have a bond program or a debenture program or a bank loan and so on. And the output is normally in the form of a symbol. It could range from a AAA downwards to a D. So that is a particular scale that they have. There are also other scales that they use. Typically for MSME, you could have an NSIC sort of scale. It could be a 2-dimensional scale on the financial capability and also the business performance. So here the entities, that is the MSMEs for instance, will actually have to approach a rating agency to get the ratings done on either the bond program or bank loan programs and so on. So today the full service rating agencies, there are 6 of them. You have Crystal, you have ICRA, CARE, India Ratings, Brickwork, and SMERA. So that is what a credit rating agency is. Essentially to tell the investors as to what is the repayment behavior that one can expect from this particular entity based on analysis of the business, the financials, and the management. So the credit bureau does not do any of these. The credit bureau essentially does provide a snapshot of the past repayment track record on an entity or the individual. The individual in this case, we are talking about, since we are talking about SMEs, we are going to be talking about the promoters. And the output is in the form of a credit report and score. So the score can vary from 300 to 900. So I'm going to be touching upon that in the next couple of slides. So the only information that is available on a credit report is what has been the repayment behavior. So it doesn't talk about what is going to be the futuristic behavior and so on, which is essentially the role of a credit rating agency. And they store the entity's information on any of the credit activities. It can be loan, it can be personal loan, it can be housing loan as far as an individual is concerned, it could be credit card and so on. So I think we already talked about the 4 credit bureaus in our country. So let's examine the details of a credit report. What I would urge all of you to do also is, while I'm going to be covering it in detail here, it might be a good idea for you also to look at the credit reports in any of these 4 websites of any of the 4 bureaus. So here we're going to be talking about what is typically there in the credit report of an individual, what is going to be in a credit report of a company, and what sort of information is available in the credit report, and what are the key takeaways for you when you see your own credit report. What are you supposed to be doing with that? So I think this is something that we talked about. So just to summarize here, this is going to contain whether you've repaid your past loans in a timely manner or not. It will also contain information on credit cards and any other loans that you might have availed of. So there are 2 types of credit reports, and I think this is where I think we need to be very careful as MSMEs. So you have to be worried not only about your, when I say you, I'm talking about the promoter's track record in terms of the payments in the individual capacity, and also from a firm's point of view. So if an MSME is applying for a loan, they're going to be looking at both the individual's, the promoter's credit report, as also the company or the entity's credit report. So when you apply as an individual for a car loan or a personal loan or a home loan or a credit card, so this consumer credit report is going to be pulled out. So when the company is going to apply for the loan for business purposes, it could be a business loan or a working capital or a term loan, the company's credit report is going to be pulled out. So along with that, they will also look at the promoters or the individual's credit report. So that's what we talked about here. So some of you might be asking, why should they look at both the personal or the individual credit report and also the entity's credit report? I think the key reason why that is being looked at is specifically in the case of MSMEs, the promoters have a huge influence in the way the MSME is going to function, both operationally and also financially. So the promoter cannot be divorced from the entity, typically in the case of MSME. So there's a strong linkage between the promoter and the MSME. So I think some of the participants could share the experiences maybe at the end of the presentation in terms of what their experience has been when they applied for a loan and what sort of reports the bank actually look at. So if you apply for a business loan, the bank is going to get both of these reports from the credit bureau. So I think that's an important thing that we need to keep in mind. So if we go back to that case study, let's assume that Banerjee and Co had repaid all its loans on time, but Mr. Banerjee as an individual and as a promoter of that company had defaulted on his personal loans and credit card. So the key is, what view will the bank take on this? Is it going to impact the loan application, or will the loan get rejected? So what is likely to happen? It is possible that the loan of the company can be rejected for the simple reason that when a company is going to apply for a loan, they're going to look at both the individual and also the company's track record and all the other parties who are connected with this company. I think right now we're only talking of promoter. In a little while from now, I'll also talk about how credit reports of guarantors, directors, and others are also going to be looked at. So whoever is going to be related to the company under the relationship details section that you'll see in a credit report, all of their credit track record details are going to be captured, and that is something which the bank is going to be looking at. So the loan officer has checked Mr. Banerjee's individual report, and since there have been delays or defaults, it is possible that the loan of the company can get rejected. I think we also need to keep in mind that from a bank's perspective, there are so many applications which are coming to the bank from a variety of MSMEs. So for a bank to make a decision, other things remaining the same, the credit report at one entity is going to be weaker than some other entity. Obviously, the bank is not going to take a risk in terms of trying to lend to a company which has had a very checkered track record as far as repayment is concerned. So I think, therefore, the key fact or key takeaway is to ensure that as an individual or as a promoter, you maintain very good credit behavior. And of course, you have to maintain good credit behavior for the company as such. So having said that, let's look at what is there in the individual credit report. So I would urge all of you to actually go through this in a lot more detail. So there are various sections to the individual credit report. So this is, and obviously each report is going from each bureau is going to be slightly different, but broadly having the same sort of contents or features. So if you look at the personal details section, this gives the outline of the demographic profile of the individual. Key thing being that you need to have an identifier to identify who the individual is. Now let's assume that you take someone by name Arun Kumar and just have the date of birth and gender. So it is possible that there are many Arun Kumars with similar date of birth and genders. So you need to have a unique identifier. So the unique identifier can be a PAN number, or it can be a driving license number, or it can be an Aadhaar number, or whatever be that identifier which can be used to distinguish one Arun Kumar from another Arun Kumar. So this is typically what this particular section will contain. The next important section as far as the individual credit report is concerned is the credit facility and the accounts details. So this will contain details of all your current loans which are being serviced, and also the past loans that you had availed of. Now, someone might ask me, what is the track record that they will keep tab of? So normally you would have a track record of about 36 months or 3 years that will come out in a credit report. In some cases, you might have 24 months in some of the company report or commercial reports. So this section is very important because it will give a detailed description in terms of what are the total credit facilities that you have availed of, what has been the month-on-month payment record in each of these facilities. It could be loans, it could be as many number of loans that you have and as many number of credit cards that you have. What are the type of loans that you have availed of, and what are the quantum of borrowing that you have taken on these loans. So if you look at it, this is just a sample. So it will have details in terms of what is the credit limit, what has been the highest level of credit availed, what is the current balance, what has been the rate of interest, the actual payment amount, details of collateral, what is the status of this particular loan, is it a problem account, is it suit filed. Within that they will classify to say whether it's suit filed, willful default, written off, and settled status. And then it talks about the payment track record for the last 3 years, DPD is days past due, which essentially gives you the asset classification. So when it says 000, it means that there is nothing which is outstanding. When it says standard, From a banker's definition, standard means the loans, 0 to 90 days is where the dues are. So once it crosses 90 days, then it will start featuring as a non-performing asset. So that is something that will get captured here. So I think for those who have actually not seen this, it must be coming as quite a surprise that so much of information is available with the credit bureaus. So the next section that will be there in the individual credit report is called as the inquiry section. Now this section essentially will outline all the applications for loans and credit cards that you have made. It'll also tell the banker how often have you actually sought a loan. So the key thing here for the bank to ascertain is to find out, are you credit hungry? When you mean credit hungry, what do you mean? Let's assume that you wanted a loan of, let's say, 2 crores. You tried with one bank. The bank refused for whatever reasons. Then you tried with another bank and another bank and another bank and so on. Which essentially means that greater the number of inquiries that you have made, it means that you have scouted for loan from one bank to the other bank. Maybe you've got it from some bank which might have decided to give you because maybe they have charged an interest rate in relation to the sort of risk profile that you exhibit. So from a banker's perspective, greater the inquiries that you have made, it means that you are a very credit hungry sort of profile of individual or company, which may or may not be appreciated by the bank, because if you're credit hungry, it means that some bank has actually rejected your proposal because of whatever reasons that they have found. And there is a possibility that since you've scouted around for so many of these banks, it is possible that in future this account can be a problematic account. The second important feature that you'll see is what is called as a credit score. Now, based on the contents of the credit report, which is there with the credit bureau, they compute what is called as a credit score, which essentially gives an indication in terms of where you stand as far as risk is concerned. So typically, higher the score, lower is going to be the risk, and therefore greater the propensity of the bank to consider sanctioning a loan to you. Now, what is a good score? What is a bad score? What is the band of the score is something that we're going to see now. So as far as individual reports are concerned, key thing for you to do is, one, get a copy of your consumer credit report immediately if you don't have one. It's anyway free of cost. So you can get it free at one point, one a year. So that's something that you can do. Make sure that all the information which is presented in that report is correct, and that is information that is pertaining to your loan, your credit card, your current loans that you have. So that is something that you have to keep tab of. Important to ensure that you make a timely payment on all your loans and all your credit cards. As an individual also, do not over leverage. Do not apply for credit beyond your capacity, because that is something that can impact you at some point in time. Do not make too many inquiries for a particular loan. As I told you earlier, that shows or signals that the credit hungry behavior that you exhibit. Now, the reason why I spent a little time on that application process is many times we do not know what we have filled in the application and may not also realize the consequences of what is being filled there. For instance, we have to be very careful about whom you choose as a guarantor and whom you choose as a co-applicant. At the same time, the guarantor also has to be careful as to whom he is going to give a guarantee and whom he is going to be a co-applicant with. So it works both ways. Now, you might, when you fill in the form, you may really not bother about, getting into the nitty-gritties of this. But the important point that we need to keep in mind is that all of the information about your guarantor, your co-applicant, the directors on your board are all getting captured in your credit information report. So if there are problems with any of these, it could be the guarantor or co-applicant. Let's assume that they have defaulted on some loan or something. All of that is going to get captured in your report because they have actually guaranteed your, let's say they've guaranteed some loan of yours as an individual. All of that is going to get captured, and they have actually defaulted somewhere else. So that's not going to be good news for you. So you have to be careful, both as an individual and as a company. who are the people that you're co-opting as directors on your board. It works the other way also. Let's say that someone has approached me to be part of the board of some company. I would not like to be on the board of a company where the company is actually making losses and the chances of default are quite high and looming large. So this is something important. So when you do the application process, do not delegate it. You please have a look at it at least once before it leaves you. Many times, from experience that we have known, the application filling in process or with the KYC documents and all that is delegated to somebody else. It could be the auditor, it could be the finance head. Maybe the promoter is just signing it at the end of the day saying that, okay, everything filled is right. So you have to know. So I think the next time that you do it, make sure that you spend time there. Also be conscious of whom you want to partner with as a guarantor or a director and so on and so forth. So that's important here. So that is as far as the individual reports are concerned. I think we'll talk about a little more in detail in terms of why the guarantor and the others are important. So when you come to the commercial credit report, this is largely similar to that of the individual report, but obviously being a company, you're going to have a little more detail on some of the parameters that you will want to see. Again here, in contrast to what you see in an individual, you're going to have details of the constitution of the company, whether it's a private limited company, proprietorship, partnership, and so on. You could have the class of activity. There could be other indicators or other parameters which can sort of distinguish one company from the other. Then would give the overall report summary. So assuming that there was one bank which is given the facility and they had 3 facilities, it could tell you that of the 3 facilities which are currently ongoing, one of them was standard, which means there's no problem with that, and this is the current outstanding there. It would also say that the other 2 accounts are non-performing assets, and the balance is so much, of which one is willful default and the other is there's a lawsuit which is filed. So these are the sort of details that you can expect to see there. And then you can also get further slices of that. What is the type of credit facility that you have availed of? What is the asset classification? Exactly the same numbers that we saw there. And then you get a 4-way classification. Is it a standard asset, substandard, doubtful, or loss asset, and so on. So these are the sort of details and nitty-gritties that you can sort of expect to see here. Then comes the inquiries section. Now, just as we talked about the credit-hungry behavior of individuals, again here, greater the frequency of credit that you try to avail from other lenders, greater it shows the credit-hungry behavior of the company as such. So in this inquiry summary, so you will have an inquiry summary here, which will tell you over the last maybe 2 years, what are the sort of inquiries that you have made. So if you look at this particular example here, you'll find that in the last 2 years or so, almost about 20 inquiries have been made. So that is something which will indicate to the bank as to what the issue with the company is, since it is seeking so much of inquiries from a number of other banks. As we saw in the individual credit report, we have the relationship details section for the commercial credit report. This section will provide details on the key persons, on the proprietor, partners, directors of the company. So if there are 4 partners, you'll have details of all the 4 partners. If you have, let's say it's a limited company and it has 5 directors, it will have details of all the 5 directors. So as I mentioned earlier, it is important for you to keep tab of whom you deal with, whom you want to partner with, and whom you want to have as part of your board member. So again, same set of details that you would have. So the indicators would be, you could again have a PAN number or Aadhaar number if it's going to be an individual details that we are going to capture here. So as I mentioned here, individual credit reports, all the related parties or related persons to the promoter, let's say, or the partners, or whoever be the owner of the company will be captured. Likewise, detailed information on every credit facility. Now, the reason why I'm going through in a lot of depth is to drive home the point that all of this information is available with the bank through the credit bureau. So it's all getting captured there. So one cannot assume that none of this, we can take a loan and nobody is capturing that information other than the bank. So all of this is captured by the bureau, which is also used by lenders in their lending decisions. So here again, just as we saw in the case of individuals, you will again have what is the credit availed, what is the type of credit that has been availed, what has been the past credit availed, whether any issues with the past loan servicing, how are the current loans serviced, and so on. So here, this particular example, we have a 24-month history. You can even get a 36-month history. So it tells you what is the credit facility, who's granted which bank has given the credit, what is the account number, how much have you got a sanction from the bank, what is the drawing power, current outstanding, how is the asset being classified. Now let's assume it was not standard, but it was a substandard asset, which essentially is an asset in default. You then try and ascertain whether it was because of willful default or there was a suit filed, amount and suit filed default. And then gives you details of the 24 months. What is the balance, what is the asset class, and so on. So this is for one particular facility. So we had 10 different loans, it will have details of all the 10 different facilities. So again here, the inquiry section tells you, let's say in the last 24 months, what is the sort of inquiry that you have made and for what quantum of loans. So too many inquiries in a short span, again, will sort of not be very positively viewed from the lending perspective. So the key considerations as far as the commercial credit report is concerned, again, leveraging, especially for SMEs, given that many of the SMEs will have a relatively small net worth base, even slight borrowing that you make for your working capital can magnify your gearing or debt equity. And when the going is good and the industry is doing well and the company is doing well, the repayment is not going to be a problem. But when there is a downturn in the sector and the company is not able to generate enough cash flows, even a gearing of 1 or 1.2 for a SME can start posing problems. So always ensure that you keep tab of what your expected cash flows are before you decide on what your borrowing quantum is. It's not that the banks are not going to do that computation and projection of the cash flows, but you as a company should also be able to ascertain what's the right optimal level of borrowing that I can have as a company in relation to the cash flow that can be generated. The second important point, I think I've said it a couple of times, ensure that the application process is done with a lot of care and make sure that all the information there is correct and accurate, and also fill in details of all the other co-applicants, promoters, directors, partners accurately. Do not delay payments beyond the due date. It can affect the prospects of getting newer loans when you need it. So let's say you delay on some 20 lakhs or 30 lakhs of installment when you actually need 5-6 crores in the banking system. This delay of this quantum of 20-30 lakhs can prove to be a big deterrent for the bank to give you a loan. So make sure that all payments are made as per your payment schedule. And important here, I think this is having done this program many times in the recent past with various associations and other bodies, I think the fourth point becomes very critical. Not many of the promoters or the MSMEs are or were aware of the fact that even this is tracked. in terms of the credit behavior of the directors, partners, and other promoters, and so on. So this is something that you have to be very, very careful about and wary about. I think the fifth important key takeaway is to make sure that you limit your inquiries as far as seeking a loan is concerned. Do not approach a number of banks at the same time, one after the other. That sort of can work negatively from a credit scoring perspective for you. And of course, if you maintain a good credit history personally and also from a company's perspective, the probability of you getting a loan is also going to be quite high. So that's as far as what the detailed contents of the credit report, both for the individual and the company, are concerned. So let's look at what are these credit scores. So essentially, we try to understand what is the credit score, how are they computed, what is considered to be a good score, and how does it impact your, let's say if there is a delay in payment, how does that impact the credit score that you currently have. So when we talk of credit score, how does the credit bureau compute your credit score? Now, obviously, just by seeing the report is one thing, but you also need to see, okay, let's say for a bank, let's say they get thousands and thousands of applications. Besides seeing the credit report, they also should be able to compare, one proposal or one borrower, potential borrower with another potential borrower. So one of the ways that they do it is also to seek what is called a credit score from the credit bureaus. Now, how is the credit score generated? Now, the credit score is essentially generated based on 3-4 parameters. It could be your past repayment track record. What is your total or loans that you have availed of? What is your outstanding loans at this point in time? How is the loan categorized? Are these secured loans or unsecured loans? And also, they could factor in what are the number of inquiries that you have made from the various banks that you have seen. Now, just as we saw in the case, the first introductory part where I told you that, when banks take a lending decision, they look at both the fundamental analysis, the credit worthiness part of it, which essentially is the fundamental analysis, and also the willingness issue. Now, likewise here, since they look at all of these factors, there are certain weights that get assigned to each of these factors there. And I must tell you that the exact criteria, the exact weightage, etc., is not published by any of the credit bureaus. So it's an algorithm that is housed internally with them, is proprietary to the credit bureaus, where they have an algorithm with different weights for different of these parameters. So some of the parameters that we saw, I just sort of took you through. So you will find that based on those parameters and the sort of weightages that they assign to these parameters, they arrive at the score. So in the Indian context, the score normally lies in a band between 300 to 900. It is possible that, if I get a credit score from, let's say, TransUnion CIBIL, let's say a score is 750, it is possible that I can get a 720 or 740 from some other credit bureau, given the fact that there could be differences in the sort of weights that they assign. So that is something that we need to keep tab of. So credit bureaus in India typically provide a score of in the range of 300 to 900. You might ask me what is a good score. So we'll talk about that in a while from now. So higher the score, greater is your chance of your loan application being accepted. So we also have to remember that the credit score is also one of those factors that they consider along with a number of other factors. It is still possible that, if the score is, let's say, 650 or 700, your proposal can still get rejected for any of the other reasons of the analysis that the bank will do. So normally, higher the score, better is your chance of getting the loan from the bank. We have to, again, remember and reassure ourselves that the score is not equivalent to the rating. It is only an indicator of what your past track record has been. It has all been translated from those reports into one number so that the bank can sort of decide how to factor this into their ultimate lending decision. So finally, it is a lender's call to decide on how they will use this number along with all those other factors that we talked about in the lending decision. So what is a good score? There is nothing which is sacrosanct to say that 600 is a good score or 700 is a good score. So the only key takeaway is higher the score, better is your probability of getting that loan sanctioned from the bank. But over a period of time, ever since these credit scores have come into vogue and being used by the banking community, it has been seen that scores generally 750 and above have been considered to be good. And they stand a good chance, not a very definite chance that, if you get 750, definitely you'll get the loan is something that I don't want to say here, because there are other factors also which are being looked at, which is what is mentioned here. So it doesn't mean that if you have 750, you'll automatically get it. At the same time, it also means that if you get a score of 600 or 650, your loan is going to get rejected. Because banks have different risk perceptions. Different banks have different risk perceptions about companies, about individuals, and so on. It could be possible that maybe the past was just an aberration and the future is looking great, in which case the bank might tend to discount that score a bit and give a larger weightage to the future prospects of future performance of the company. So the next important thing is, how does my repayment behavior affect the score, and what do I need to do in case I have defaulted, either as an individual or as a company? So let's talk about individual, because we have scores for individuals only. Now let's go back to that same Mr. Banerjee example on personal loan. Now, if you look at it from a time frame for about a year, from January 2014 to December 2014, you find that I think what we are seeing here in the upper part of the slide are the days past due, DPD's days past due, which shows that January there have been no overdues, payments have been going on time. Feb has been good, March has been good, April has been good, May has been good. In June, which is what it is highlighted in red, there have been a 30 days delay, followed by in July it became 60, then it became 90, it became 120, in October it became 150. In November, it got settled, so we were back to square one. And subsequently, okay, there are only 2 months, so November and December, there have been no repayment issues. How does that impact the score? So you had a score which was showing a steady increase from 700 to 750 from January 2014 to May 2014. After that, it slipped as the delays started mounting. So steadily the 750 became 680, 650, 610, 600 to 560. That is October 2014. In November, the repayments, they were back to square one. There were no issues as far as repayment is concerned. But the score has only moved up by 10 points. So you might ask, why can't it go back to the 750 or 700? Now the answer to that is, the credit bureau is going to take some time to watch how the repayment is going to be over a period of time before bouncing back to the earlier levels of 740 and 750. So the key point that we need to remember is that once you default, bouncing back to the earlier score is going to take a while. It's called as a cool-off period, because essentially the credit bureau wants to make sure that the repayment track record is back to where it was. You can't take a judgment based on 2 months and say that everything is fine. You need to have a cool-off period. What that cool-off period is something that is not disclosed. I don't know what the cool-off period is. It could be 1 year or so. So any of these scores which have got a dip post the default is going to take some time before it gets back to the original level, which again strengthens the fact that you have to ensure that the payments are made in a timely manner. A parallel to that in a rating agency context, I think some of you might have gone through this rating exercise, is that let's assume that your rating was, let's say, a high rating. You had a default, you came all the way down, then you started making payments. It's not that you'll go back to the original rating that you got. the rating agency is going to take that much amount of time to try and understand what your repayment behavior is going to be over a period of time before they slowly inch their way up to what the original rating was. So very similarly, even a credit bureau will not put your score back to that 740 750 which was there prior to the default. It is going to take that much amount of time, which means that let's assume that as a company that you needed money at that point in time. Let's say that you had a new capital expenditure plan, or you want to expand capacities, or you want to acquire another small company somewhere and you needed the money. The chances are that you may not get the money if you have actually defaulted in the recent past, because your score is going to be not so great. And if score is one of the factors that this particular bank that you're seeking funds from is looking at, you're not going to get that loan for the expansion or the acquisition that you plan. So very, very important that you need to exhibit that good credit behavior at all points in time. So many of the people do not understand, it's okay that, we'll default for 5 days and then, we will get back. But getting back is a very tedious process. So you should not be defaulting on these loans, whether even for 1 day or 2 days or whatever it might be. Let's say the due date is 30th of April, it has to be paid on 30th of April. So that credit behavior becomes very, very important. So here we are talking about repayment of loans. I think there are various other studies that World Bank is embarked on in terms of trying to use other surrogate variables. It could be payment of your electricity bill dues. It could be payment of telephone bills. So various other surrogates are also being used, trying to be used, so that the lender has, so all of that information gets captured to the credit bureau, so that you have a wider spectrum of variables that can be used in the ultimate credit decision process. So this is one of it. I think slowly you will see that there are other variables also coming into play. These are variables which have been used in other countries as well now, and which have been captured by the credit bureaus. It's going to slowly find its way in the Indian market space as well. So to sum up this particular section, a higher score means lower probability of default, and it will improve your chances of getting a loan. Doesn't surely say that if you have 750 you will get a loan. So it's one of those factors. It depends on how the bank is viewing the other factors in relation to this. So banks use a score. One of the other things that I wanted to check out, I wanted to discuss was, let's assume that you had a score of 650 only. The bank that you applied to had actually defaulted on that. Not defaulted, they decided not to sanction that loan. Now what will you do? I think today's context, there are other entities which are willing to take up additional amount of risk in lending by charging an additional premium on the interest rate. There are a lot of these non-banking finance companies which cater specifically to the SME sector and create products for the SME sector specifically. So those are entities which you can actually look at. Besides the banks, you can also look at other entities like the non-banking finance companies, where maybe a 650, a bank might have a different risk perception, whereas an NBFC might have a different risk perception about the company and may decide to actually give you the loan. So I don't think one should lose heart to say that, okay, there's only 650 and I've got rejected by this bank. So that today, as we talked about, there are these small finance banks, there are these specialized banks today which cater to the SME sector and so on. So you need to actually figure out all these options which are available in the marketplace. So coming back here, just to recap here, one of course the payment history that we talked about through the session, the number of inquiries, what are the outstanding loans, whether it's secured, unsecured, and so on. And this is what I meant. Different banks can interpret the score differently depending on the sort of underlying risk perception that they have. And as I told you here, incorrect information can also impact your score. Let's say that you gave some, I think when the application was given and you did not fill in the application with the sort of due diligence that one would have expected out of you, can also impact the score. Let's assume that things were not filled in correctly. One of the important things that you might be thinking of now, as I've been going through this presentation over the last hour and almost half, is that let's assume that I get the report here today, and I find that there are a lot of these errors there. What do I do with it? These don't seem to be loans that I have taken, or these don't seem to be data as far as my credit card is concerned. I think nothing to worry. There is something called as a dispute resolution process, which can set right some of the anomalies in your credit report, and therefore can also bring about a change in your score. If it's currently low because of some errors that you see in the report, it can be addressed. So this is called as a dispute resolution mechanism. So what is this process? Now, if you go back to that example there, let's assume that this Mr. Banerjee's credit report is giving a very bad picture about his repayment track record. It is possible that there could be a lot of mistakes in that particular report that has got generated. As I mentioned, the information did not belong to Mr. Banerjee, but to somebody else. And it is also possible that he repaid all the loans and the bank had not updated it on their records, and therefore sent a slightly earlier version of his loan status to the credit bureau. So what can you do? Now, as we said earlier, the credit bureau's role is not to tinker around with the data that it gets. It only will process the data as is, where is, the way it has got, or receive the data from the banks and other lenders, credit card companies, and so on. So what they do is they have a dispute resolution mechanism in place. Now, the moment that you download your report today, I must also tell you that you can actually download your report within 10 minutes. I think that's what is there on these websites. From the time that you give your basic details, I think you're supposed to give your PAN number and a few other details there, your email and a few other details. I think it'll reach your email ID within 10 minutes. Now, the moment you get that, you need to spend some time to understand what is there in the report. So there are these, the key or the legends to the report are given. So once you understand that, if everything is fine, I don't think you'll have an issue. But if you find that your score is low, and if you find that there are a lot of these loans which are showed as not paid, then you have to go through that report with a fine-tooth comb and start finding out whether there's any error or mistake in that report. Now, if there is an error or mistake, you will contact the credit bureau, and they will contact the bank to say that this data seems to be erroneous, and this is what the consumer has come back to us with. At the same time, you can also approach the bank to say that this is not my data, and I've actually paid the loan. Now, when this particular dispute is raised, what happens to your report, which is there? The disputed areas are actually shown as a red. There is a red border around the disputed areas of your report. So that is something that you can see. So actually, when you look through the details there in a sample report there, you'll find that disputed areas are marked with a red outline there. So that is something. So if someone sees that, they know that that's a disputed area, and we'll have to wait till that dispute is resolved. So you'll contact the bureau to initiate the dispute. The bureau will contact the bank. The bank will either correct the data or confirm the data. So the bank says that the data is right, then the bank will confirm the data. If there's a mistake or if it's not updated, then the bank will update it and send the data back. So this whole process typically is going to take about a month to resolve the dispute. So a smart way of doing it is to first raise a dispute with the credit bureau, at the same time to go to the bank to say that these are the sort of errors that I found in the report, and I've repaid all the loan, and why is it showing this? So that might be a faster way to resolve the dispute and get that red outline removed off the credit report. So this is something that is available. So if you find that there are errors or seemingly which seem to have been captured in your report, then I think this is what you need to do. So coming to the key takeaways finally, the bad practices and their consequences and why you should avoid all of this. One, of course, I think I've told you both from an individual and a company's perspective, don't over leverage and do not borrow beyond your means and cash flow that you generate. And that can sharply increase your liabilities and your indebtedness and put pressure in terms of your ability to repay in a timely manner on due dates. So that is the first point. So do not over leverage. The second important bad practice which you should avoid is to not pay your installments in full. Two effects. One, of course, you're going to be charged at penal interest rate, which is going to be further putting pressure on your finances and your cash flows. The other thing also is paying well beyond the due date can again have a similar sort of impact. It's going to get captured in your report, which will pull down your scores and also reduce your probability of getting a loan from the bank. And of course, the credit hungry behavior has to be reduced to whatever extent that can be done, and that can be viewed negatively. So make sure that all of these are avoided. And of course, a good practice is exactly what you should be doing. Again, borrow what you can service. Do not borrow beyond your means, and also choose have systems in place which will enable you to know, when you're going to repay your loan, what is the due date, how much you have to repay. Have a good cash flow mechanism in place, cash flow statements budgeted that can keep tab of your month-on-month cash flow. So that becomes very important from a repayment loan perspective. And of course, I told you, check out your credit score and your credit application before you start off making a loan. I think that's a good practice to do. Before you apply for a loan, rather than applying it and then discovering that there are errors, both from a company side and also from the individual side, make sure that you have all the scores and reports with you. Go through it to see if there are errors, see what the scores are, and then apply for the loan. I think that will cut out a lot of time. Should there be errors and it's going to take time, I think that process is something that you can sort of sidestep right away. So that is something that you need to do. And of course, you have to repay your loan installments in full. Now, the advantage of from a borrower's perspective is if you're going to be exhibiting good credit behavior, of course, the bank, assuming that other things are okay with them, will be able to sanction you loans, will be able to sanction you favorable loans from an interest rate point of view. You might also get lower collateral requirements. And since all of us know that funding is a key thing for the SME, and more importantly, timely funding becomes very important. So let's assume that there were delays and defaults and all that. That's sort of going to delay when you're going to get funds from the banking system. So key is to maintain that financial discipline so that you can access funds. And I think very clearly, I think there is a move towards risk-based pricing. Highly credit-worthy borrowers get funds, at cheaper cost compared to other borrowers. So that's something which is happening in the Indian context as well. And there are enough and more case studies to show that, many of the SMEs have benefited because of, exhibiting good credit behavior along with good business and financial fundamentals. So that is something that, we have seen. And I think going ahead also, I think given the sort of issues that the Indian banking system has with the NPAs, I think this whole credit information reporting is going to assume a lot of importance in the overall. Not that it's not there, but I'm saying that, going ahead, I think the importance of this is going to be all the more. And you would see that, a lot more of these variables and other parameters and other surrogates of, the repayment behavior from the SMEs is something which will also get captured. So you're going to see that, banks will have access to a number of data, not only on the basis of your loan repayment, but also, other forms of repayment. As I mentioned, your utility bills, your telephone bills, and so on and so forth. Maybe, payment to, other bodies, statutory bodies, and so on and so forth. So all of these, over a period of time will make sure that, the loans are actually made available to credit-worthy borrowers. So, to round up, my part of the presentation, and I think an important takeaway is that every time that you apply for a loan as, a company, you're going to have both the individual reports and the company's reports being looked at very closely. Of course, I think all of you know now that, the credit report is going to be an integral part. So the bank is going to seek that from any of the 4 bureaus. Important also to make sure that your credit card repayments are going to be on time. So that is something that is going to be important. And as I mentioned a couple of times, becoming a guarantor or co-applicant to a loan also affects your credit report. So that's something that you need to be very, very, it works either ways, in terms of, who your guarantors are going to be. And let's assume that you're going to be a co-applicant somewhere else and then the loans are not repaid. That can also sort of impact your credit report. So thank you. And I think bang on time as far as completing this presentation. So I think I'm happy to take questions on this subject.